Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two beaten down stocks that analysts still rank a strong buy. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that are in the red these last few months. However, they are still picking up some new buy ratings from top ranked analysts. So we're going to take a quick look at these companies, what it is that they do, and what type of recovery analysts are predicting for their stock's future. Don't forget, you can check out these stocks for yourself over on TipRanks.com or by downloading the TipRanks mobile app using the links in the description down below. Now let's get right into today's stocks. First up, we're taking a look at Cenovus Energy. Their stock trades under the ticker CVE and is currently priced just above $16 per share. Overall, the past year, they are down 9%. They did start to climb up here in the fall, hitting 52-week highs in October, but in the last 3 months are now down 21%. Hedge funds seem to be taking advantage of this lower stock price. In the last quarter, hedge funds increased their holdings of Cenovus by 7.2 million shares, including some notable positions here with one over $460 million worth. Cenovus works across the full oil and natural gas value chain. They are an integrated oil and natural gas company based out of Alberta, Canada, and they have operations across Canada, the United States, and Asia-Pacific region. They work in exploration, production, refining, transportation, and retail, providing products that help power their communities and energize the world. Cenovus reported their latest quarterly earnings report near the start of November, and they did come out with an earnings beat, however fell a bit short on revenue estimates. The company also renewed their share buyback program. For their third quarter, they reported earnings per share of 71 cents, which came in 1 cent ahead of analysts' expectations, and revenue came in at $10.72 billion. Their next quarterly report in February, analysts will be looking for earnings per share of 60 cents, over double last year. Following this earnings report, we did have a 5-star analyst from Goldman Sachs who reiterated their buy rating. They were influenced by the company's positive Q3 results, which surpassed Goldman Sachs' estimates, saying that the major drivers of this outperformance were the stronger than expected results from the oil sands and U.S. downstream operations. They also appreciate the continued progress on downstream operational inflection, highlighted by the return to full operations in Toledo in mid-June and the successful startup of the FCC at Superior in early October. Overall, the Cenovus Energy stock has attracted 11 current analyst ratings and comes in as a strong buy, with 10 buy ratings and just 1 hold. With an average price target of $24.60, analysts are feeling pretty optimistic, as that would be an upside potential of 53% from current prices. Looking at our detailed list down below, we can see we have a recent rating coming in just a couple days ago from a 5-star analyst at RBC who gives the stock an upside of 46%. And in fact, all of our price targets are well into the double digits. Our low-end price target is actually at 42% upside, and the high end comes in at 74%. And our second strong buy beaten down stock is Semtech. Their stock trades under the ticker SMTC, currently priced just shy of $20 per share. They've had a tough year. Overall, they're down 33%, including nearly 20% in just the last 3 months. However, today we have seen them jump up following a positive earnings report, which we'll get to in just a second. Also increasing is crowd wisdom. We've seen an increase of investors holding the Semtech stock in the last month, especially when we look at top investors. They've risen by 19% in the last 30 days. Semtech designs, develops, and manufactures a wide range of technology products. They are a high-performance semiconductor, IoT systems, and cloud connectivity service provider dedicated to delivering high-quality technology solutions that enable a smarter, more connected, and sustainable planet. Their products are sold into infrastructure, high-end consumer and industrial equipment end markets, and their solutions are used in some of the most innovative systems and products available. As you saw, the Semtech stock was on the rise today following their earnings report last night, where they came out with a surprise profit versus the loss that analysts were anticipating. For their third quarter, they reported revenue of just over $200 million, which did come in above their guidance, and earnings per share of 2 cents when analysts had been anticipating a loss of 15 cents per share, so a big surprise there. They said that while recognizing ongoing constraints in our hardware business and effects of elevated channel inventories, we noted stabilization of end market demand for our semiconductor business. And with that positive earnings report, we have a flood of Wall Street analysts weighing in on the Semtech stock. One of those is Quinn Bolton. Now, he is in the top 5 out of 8,600 Wall Street analysts, and he just reiterated a buy on the stock. He gives a buy rating due to a combination of factors that suggest resilience and potential growth despite some headwinds in the industry. He said the reasons for this optimism include Semtech's solid performance in the latest quarter and initiatives to cut operating expenses. He also emphasizes Semtech's strategic financial management, including further cuts to operating expenses, which are expected to drop to around $74 million per quarter. Overall, Semtech does come in as a strong buy with 12 current ratings, breaking down to 11 buys and 1 hold. And once again, we have a very bullish future outlook here with an average price target of over $31. That would be an upside potential of 60% from current prices. Down below, we see a lot of 5-star analysts weighing in on the stock here, which we love to see. As we mentioned, Quinn Bolton, a top-ranked analyst, giving the stock an upside of 33%. On the low end, we do have an upside of 13% and a high-end price target coming in over 100%. So that is a quick look at 2 stocks that are in the red the last few months, but are picking up some buy ratings from top-ranked analysts lately. Let me know your thoughts on these 2 companies in the comments down below. I always love hearing from you guys. And of course, keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.